Good evening, everybody. Mike Vacchi, Princetontrader.com here with your post-Fed interest rate announcement evening webcast as we head into the end of this week. 2 days left in the trading week. We'll be out again in the morning with our usual market webcast. But let's talk about today and key levels for tonight. So, hourly chart here, you can see the high today, 69.08. We spoke last night, we spoke this morning about the ability to try to take out the 69.05 high from Friday and what the reaction was going to be. I'm not surprised they brought it in. In fact, I mentioned in the room today to the subscribers in real time that I wouldn't be surprised if we headed all the way down here to 68.46 quarter, which is the pre-FOMC price. And we've done, where do we close at? 93. And we've done, 20-something handles so far. Wouldn't be surprised if they finish the job. It's very typical. Doesn't always happen, but it's very typical to retrace back to that pre-FOMC price within the first 24 hours. Either retrace up or retrace back. We'll see. They have their work cut out for them, but and then the important part will be once it gets there, what happens next. Before the Fed, the bulls did a very good job of trying to get back towards the 9-day today, defending these lows, 33, 35. The bears just didn't have any answers down there. And the Fed announcement gave them the lift they needed to deal with the 9-day, to deal with weekly pivot. They converted them on a closing basis. Like I said, I think we're going to get a retest. We'll see. I'll be very curious when we're here tomorrow night to see where we are relative to weekly pivot and the 9-day. A full 24 hours. Say they do cut down here, get back to the pre-FOMC price. Do they revisit? Does it keep going? Are we in between? Does all this just look like an overreaction? We'll know in a day. We'll know in a day. Very briefly, daily chart. We're still consolidating. We're still cruising. This didn't do some big blast off that's getting followed through overnight. We're right back in the zone. We're trading 68, 69. We were doing that Friday. We were doing that, we were doing that on Monday. We were doing that Friday. So we're not in uncharted territory here, either to the upside or the downside. They didn't jam it down. It wasn't a 2-3% down day or a 2 or 3% up day. Lifting up, and we're not to the point where we're challenging these highs. I would say that if the 9-day holds, if the weekly pivot holds, and if you take out 08, there's really not much left to do at that point but go back and deal with 69, 53.75. Maybe not immediately. Maybe it's another slow bleed and they take them kicking and screaming to the upside, but the bears are running out of time and they're running out of excuses to knock this tape down. Every day above the 9-day, every day above the 20-day, which is that green line there, every day above the weekly pivot is another day where, not weak shorts, like real shorts that short the underlying issues that do these things, they will take their ball and go home. Okay? They will take their ball and go home, and they will show up again in January, and they'll really try to knock it down then. Because, typically January you get a pretty good pullback. So the longer we do this, the more likely it is that those kind of shorts step aside and set themselves up a better entry point into January. It's my 2 cents. All right. Have a fantastic rest of your night. Be good. We're back in the morning. Regular market webcast. Take care.